Imagine waking up tomorrow to a news alert so explosive it fundamentally rewrites the global economic order. An alert that doesn't just whisper about change but screams it from the digital rooftops of every major financial institution on the planet. What if I told you that the very foundations for that alert were being laid at this very moment, not in the dusty backrooms of Baghdad, but within the polished, hallowed halls of the International Monetary Fund and the World Bank, institutions so powerful they can literally make or break a nation's economy with a single policy directive? The seismic shockwave I am referring to is the long theorized, much debated, and perpetually anticipated revaluation of the Iraqi dinar, an event that has been the subject of countless dreams, skeptical dismissals, and fervent online speculation for over a decade. But today we are moving beyond speculation and into the realm of tangible, documented, and verifiable action that points to a coordinated, deliberate, and shockingly rapid move towards integrating Iraq back into the global fold, not as a war-torn petro-state, but as a stable, financially robust economic partner. The silence from the mainstream media is deafening by design, because when this story breaks, it will break with a force that will send ripples through every Forex market, every investment portfolio, and every geopolitical strategy from Washington to Beijing. The clues have been scattered like breadcrumbs for those willing to look beyond the headlines and delve into the dry, complex, yet incredibly revealing official documents published by these global financial titans. We are talking about detailed Article IV consultation reports from the IMF that go far beyond the usual platitudes about fiscal reform, documents that now explicitly discuss technical assistance for modernizing Iraq's financial payment systems, for strengthening its central bank's independence, and most critically, for establishing a clear, transparent, and market-driven exchange rate mechanism. This is not accidental language. This is the precise, technical verbiage used when a country is being prepared for a significant monetary transition, a transition that would be impossible with the dinar's current artificially low and cumbersome exchange rate. Concurrently, the World Bank has shifted its focus from mere reconstruction loans to substantial development policy financing aimed at economic diversification and, crucially, private sector growth. A sector that is strangled by the existing multi-tiered exchange rate system that creates a nightmare for international investors and Iraqi businessmen alike. Think about the sheer logic of it for a moment. Why would these institutions, notorious for their risk-averse and methodical approach, pour millions of dollars and immense technical expertise into building a modern financial infrastructure for a country only to have it operate with a currency that is effectively walled off from the rest of the world? The answer is they wouldn't. The investment in Iraq's financial plumbing, its clearing systems, its banking regulations, its digital payment platforms is a direct prerequisite for a revalued, internationally recognized currency. This is about more than just making dinar speculators rich. This is about the grand chessboard of global economics. A stable, economically viable Iraq with a strong currency becomes a pivotal and reliable energy partner for Europe and Asia, counterbalancing other regional powers and creating a new corridor of economic influence. The recent high-level meetings between Iraqi officials and their counterparts at the Federal Reserve and the U.S. Treasury, meetings that were conspicuously absent from the evening news, have not been about discussing the weather. They have been about the intricate, behind-the-scenes coordination required for a monetary event of this magnitude, covering everything from liquidity support to the logistical nightmare of distributing new currency notes or recalibrating existing ones. The timeline is accelerating because the geopolitical pressure is immense. The world needs a stable Iraq, and a stable Iraq needs a stable currency that reflects its true economic potential, not the ghost of its conflict-ridden past. The pieces are all on the board. The key players have taken their positions, and the narrative of perpetual delay is being systematically dismantled by a wave of concrete, institutional action. This is the calm before the storm, the deliberate, quiet preparation that always precedes a paradigm shift. To ignore these signals is to ignore the very mechanisms of global finance itself. And for those who have held on, who have done their due diligence, the wait may finally be reaching its breathtaking conclusion, a conclusion that will be written not in the blogs of gurus, but in the official press releases of the IMF and the World Bank and the frantic real-time data feeds of the world's foreign exchange markets. The mechanism behind this impending shift is where the theoretical meets the technical, and it is within these complex details that the true certainty of this event reveals itself, moving it from the realm of hopeful possibility to one of logistical inevitability. Let's dismantle the single greatest myth perpetuated by the naysayers and the financially uninformed, the crippling specter of hyperinflation that would supposedly erupt from a significant upward revaluation of the Iraqi dinar. This argument, while seemingly logical on a superficial level, completely collapses under the weight of modern monetary theory and the specific, carefully engineered circumstances being constructed for Iraq right now. A currency revaluation is not the same as printing trillions of new currency units and flooding the market with them. In fact, it is often the exact opposite, a monetary contraction that increases the value of each unit in circulation. Think of it not as creating more money, but as making each individual unit of money you already hold more powerful, more valuable on the international stage. The fear-mongering around hyperinflation is a relic of a different economic context, one that does not apply to a nation sitting on one of the world's largest proven oil reserves and which is now implementing a stringent program of fiscal discipline under the direct supervision of the IMF. The key to understanding why this revaluation can and will happen without triggering an inflationary spiral lies in two critical concurrent actions: the demonetization of the large, lower value notes and the strategic increase of the currency's backing by tangible assets. Iraq has been preparing for a delete the zeros campaign for years, a process that would see the current 25,000 dinar note, for example, become a 25 dinar note, instantly simplifying the currency and psychologically resetting its value for both domestic and international users. This process, often mistaken for a simple redenomination, is the essential precursor to the revaluation because it streamlines the monetary system, making it efficient and ready for a new higher value. But the real anchor, the fundamental bedrock that will give the new, revalued dinar its immediate and unshakable credibility, is the asset that has always been Iraq's source of ultimate economic strength. Its oil and gas wealth. The central bank of Iraq has been aggressively moving towards fully backing the currency with a basket of gold and hydrocarbon reserves, a move that transforms the dinar from a fiat currency based on government decree into an asset-backed currency with intrinsic, real-world value. This is a game changer of monumental proportions. When your currency is directly convertible not just into a promise, but into a tangible, globally demanded commodity like gold and oil, its value is no longer a matter of speculative opinion, but a direct reflection of national wealth. This asset-backed model is what allows for a dramatic increase in exchange rate without the feared inflation, because the money supply is now directly linked to and constrained by the value of the physical assets held in reserve, creating a stable, defensible monetary platform. Furthermore, the new electronic payment systems and modernized banking infrastructure being installed with World Bank help are designed to manage this transition seamlessly, ensuring that capital controls can be carefully lifted in phases to prevent a sudden, destabilizing flood of capital, while still allowing for legitimate international trade and investment to flow freely. This is not a haphazard overnight flip of a switch. It is a meticulously choreographed financial ballot, with every move from the central bank, the finance ministry, and the international partners designed to ensure a soft landing for the new exchange rate. The recent and very public crackdown on financial corruption and the closing of illegal money exchange houses in Iraq are not isolated events. They are the necessary house cleaning required to ensure that the new strong dinar is not immediately manipulated and undermined by shadowy networks and black market forces. The stage is being swept clean for a new actor to make a grand entrance. All of these technical maneuvers, the demonetization, the asset backing, the infrastructural modernization, and the anti-corruption drive converge to create a single inescapable conclusion: the revaluation of the Iraqi dinar is not a question of economic possibility, but of political and logistical will. The economic arguments against it have been systematically dismantled by a decade of preparation, and the technical pathway has been laid with painstaking precision. The remaining hurdles are not financial. They are merely final administrative and political checkboxes that are being ticked off one by one in closed-door meetings, far from the public eye, but visible in the undeniable trajectory of every policy decision and international agreement being signed. So where does this leave you, the individual investor, the everyday person who has been watching this story unfold for years, perhaps with a mix of hope and skepticism, wondering if this is finally the moment when theory becomes life-changing reality? The convergence of institutional momentum, technical preparation, and geopolitical necessity we have detailed paints a picture that is impossible to ignore, a financial perfect storm that is hurtling towards a single inevitable conclusion. This is no longer a matter of if, but a matter of when, and the when is looking increasingly imminent, measured not in years, but in months or even weeks. The signals are now shifting from the dry pages of IMF reports to the tangible realities of the global marketplace. We are witnessing increased and highly unusual trading volume in dinar, related financial instruments on obscure but significant international platforms, a telltale sign that sophisticated money is already positioning itself ahead of the public announcement. The whispers in the Forex trading circles are growing louder. The analytical models are being updated, and the smart money is moving with a quiet urgency that those in the know recognize all too well. This is the critical juncture where the informed separate themselves from the uninformed, the point at which knowledge transforms into decisive action. For you, this means that passive waiting is no longer a viable strategy. The window of opportunity, while still open, is narrowing with every high-level meeting between the Iraqi government and its international partners, with every new technical agreement signed with the Federal Reserve, every shipment of new banking infrastructure hardware that arrives in Baghdad. The moment the official announcement is made public on major financial news networks like Bloomberg and Reuters, the speculative window will slam shut instantaneously, the value will be locked in, and the opportunity to acquire dinar at its current pre-RV rate will vanish forever, becoming a footnote in financial history. Your action today, right now, is what will determine whether you are a spectator to this event or an active participant in the wealth transfer it will unleash. Do not fall into the trap of analysis paralysis, constantly searching for one more piece of confirmation while the ground shifts beneath your feet. The confirmation you seek is already here, embedded in the strategic actions of the world's most powerful financial institutions. This is your chance to be on the right side of a historic economic correction, a recalibration of a nation's worth that happens only once in a generation. Imagine the future you can build with the financial freedom this event can provide, the ability to secure your family's future for generations, to invest in meaningful ventures, to contribute to your community in profound ways, and to live a life devoid of financial stress and limitation. This is not a pipe dream. It is the mathematical and logical outcome of the processes we have laid bare. The path has been cleared by global powers for reasons that serve their own strategic interests. But the beautiful, democratic nature of the Forex market is that it allows individuals like you and me to align our own interests with that global momentum. You have the information, you understand the mechanism, and you can see the undeniable trajectory. The final step, the most crucial step, rests solely with you. It is a step that requires courage and conviction, but the evidence is so overwhelmingly in your favor that inaction becomes the greater risk. This is your moment to decide. Will you look back on this day as the moment you seized control of your financial destiny, or as the moment you hesitated and let a once-in-a-lifetime opportunity pass you by? The choice is yours, and the time to choose is now. And if you found this deep dive into the undeniable evidence behind the Iraqi Dinar's revaluation enlightening, if it has provided you with the clarity and confidence to see the road ahead, then you absolutely cannot miss what we have for you next. We have compiled a comprehensive step-by-step action plan and a dedicated follow-up video, a guide that breaks down the exact verified channels for secure dinar acquisition, the critical post-RV banking procedures you must know to protect and manage your assets, and the common pitfalls and scams you must avoid at all costs in these final crucial hours. This is not speculative advice. This is a concrete blueprint for success designed specifically for our audience. That video is waiting for you right now, the very next video we recommend you watch on this channel. Go and watch it immediately to ensure you are fully prepared and operationally ready for the announcement that will change everything. Do not delay. Your future self will thank you for taking this final essential step. Click on the screen now or use the link in the description below. Secure your knowledge, secure your strategy, and secure your future.